What's up, guys? Welcome back to the channel. In this video, I am going to drop you guys a trade setup that is capable of playing out anytime soon, potentially looking anywhere around 100 pips or more target. So I advise you use this as a guide alongside your trading strategy and take advantage of this free setup right here. And then make sure to watch this video to the end, as I will be sharing with you guys very key important tips on how to find trade opportunities the right way. So yeah, let's get right into it. All right, the first step to finding trade opportunities, you need to understand whether the market is bullish or bearish. And that takes us to a market structure. The market structure. What is the market doing? So you very well need to understand what the market doing. Well, personally, I do not go any further into a currency pair chart looking for trade opportunities unless I have a minimum of 2 time frames in sync. Let me show you exactly what I mean by that right now. Well, from the Euro GBP chart right here in front of my screen, looking at the weekly time frame, sorry about this, guys. Let's make quickly clear up the charts. Like I said, the first thing you need to understand the market structure. From the weekly chart right here on GBP, on Euro GBP rather, you can clearly see we are very bullish. Having seen price made us a new high. That is what higher than the previous high. So as you can clearly see, what we have, this the previous swing high. We have this being the previous swing low, and then we have ourselves what, the higher high, the higher low, and then what clearly price has made us what, a higher high, higher than the previous high, breaking above the previous high, closing above what, the previous weekly levels, and now this confirming that what, we're very bullish from the weekly time frame perspective on this. So clearly, this right here establishes some of the facts that what, the weekly time frame is bullish. So we have the weekly bullish. Then moving to the daily time frame. Clearly also, we can see what the daily time frame is what very clearly bullish. Or we have what a new swing high that has closed above the previous what higher high right here. So we have what this swing high breaking and closing very what clearly above the previous swing high, creating what a higher high. And we have ourselves what a higher low, and then more like what a potential new higher low right here. As you can see, what the market is already what turning with a much bullish pressure, more like what continuing in what in the bullish moves back to the upside. So we have the weekly time frame bullish, the daily time frame also bullish, and then taking this a step further, 4 hourly time frame. As you can see from the 4 hourly time frame, we were printing what series of what lower highs and lower lows, lower low, lower high, lower low, lower high, lower low, and then what clearly we had this nice what bullish momentum candlestick breaking and closing above the previous what the previous swing high, the previous lower high, shifting what the market structure as seen on the 4 hourly time frame perspective from what from bearish and now what to a bullish market structure. So we have what we have this being the have this being the previous lower high that led towards this lower low. So from the 4 hourly time frame perspective, as long as price stays what below this high, we are still very much expected to be in what in a bearish market structure. But clearly we can see that what we are having a nice bullish candlestick where you can close above this swing high, shifting what our market structure from bearish to bullish. So we have ourselves also the 4 hourly time frame bullish. So here we have what three of these time frames in sync. We have the weekly time frame bullish, the daily time frame bullish, and the 4 hourly time frame bullish. Guys, there's no reason why we should be looking for what selling opportunities. Having seen that what we are having what the majority of the time frames what in a bullish market structure. We want to look out for what potential buying opportunities only. Opportunities that are what very much in line with what the higher time frame bias. Now, having established the market structure, having established the market structure as the number one key criteria. So put in check. It takes us what to the second. This takes us to the second step to finding what trade opportunities the right way. And that would be finding areas of potential trade opportunities. Capital for short. Well, the majority of you guys know this to be areas of interest. They're both the same thing. So yeah, after finding the market structure, you then want to what? Find areas of potential trade opportunities or areas of interest, as the majority of you know it as. As we have established from the first point, we have the majority of the time frames bullish, and as such, we'll only be looking for buying trade opportunities. Now, this is where we mark up our higher high and higher low. And that you can do from what? From any of the time frames. But I will stick with the 4-hourly time frame. So from the 4-hourly time frame, we clearly add ourselves what? A shift in market structure from bearish to bullish, pointing us what? A higher high. And then we have ourselves what? The swing low that led to what? This high right here. Guys, you really need to understand what? We're only looking for areas of interest to buy within what? Within this box. So this is something I do, a little arc I do. So within this box right here is where within this box right here is where we would be looking for what are areas of what interest to get in on what potential buying opportunities. And now this is where the smart money concept traders or the inner circle traders will come and look for what other blocks within this box to set their buy limits. But personally, what I do is what I look out for whatever point has the most touches. And in this case, it is around psychological 88,700. So somewhere around this level, what do we get to see? get to see what, not just having a round psychological number there, 88,700. You can see previously, looking to the left, we had the level what has a support, and then what, a resistance also. And then clearly we have a break above the level. So we can see what, lots of what, touches from this level, hence making this level what, a key level, because previously we had what, support, then resistance, second resistance, and then what, we are having to see price clearly what, break above the level, and then what, because we're now above the level, at the retest of the level, we're expecting what, the level to act as what, the support. So this is what, this is a point of interest for what, potential buying opportunities. And then also we have ourselves what, 88,500 as another point of interest to consider for potential buying opportunities. And if you look to our left, you can clearly see what, the touches from the level. So we had previously, where the level acted as what, a support right here. And here also we have a support. And here we had the level acted as a resistance. And now what, we're very much above the level. So we're expecting what, at the retest of the level now, because we're very much above the level is expected to act as what, as a support also. So we have what, two areas of interest, or would be very much looking for what, potential buying opportunities from. Now, guys, after you've marked up your area of interest, this is where you will go down to what, the lower time frames to enter your trade. And this is the cash to your entry target. You're looking, you're looking to buy, then you need to buy from a potential higher low. And if you're looking to sell, you need to sell from a potential lower high. If you're looking to buy, you need to buy from a potential higher low. And then if you're looking to sell, you need to sell from a potential lower high. What do I mean by this? So guys, assuming we have ourselves what, a very clear uptrend that we've identified, this right here is only what, a, a higher low when once what, price breaks and closes above what, the previous high. This is only what, a confirmed higher low when once what, it leads to what, a break in market structure above the previous high. Otherwise, it's what, it's a potential what, it's a potential higher low. So this right here is a potential higher low. It only becomes what? A confirmed higher low when once what? It leads to what? A break in the market structure above what? Previous swing high. Then the reverse is the case for a bearish market structure. This right here is a potential lower high, and it's only a confirmed lower high when once it what? Leads to what? A break in the market structure below what? The previous swing low. Then it's what? It's a confirmed lower high. Otherwise, what? It's a what? It's a potential what? Potential lower high. So for selling opportunities, we need to what? Look to get in on sales from what? Potential lower high. Then, if we're looking to buy, we need to buy from a potential higher low. We need to be buying from a potential higher low, guys. Now, this takes me backwards. So, our charts right here, we're very much looking for what? Potential buying opportunities. And now what? We clearly have ourselves what? A shift in the market structure as we have established already, from bearish market structure to a bullish market structure, giving us what? A higher high. And then what? Where do we then buy from? We need to buy from what? A potential higher low. So we need what? For price to what? We need for price to give us this nice what? Pull back into what? Our already identified areas of interest. And this is where what? We then look for what? Confirmations, candlestick confirmations, price action confirmations to what? To go longs from. Or we could very much see price what? Come a bit further down to what? The second what? Point of interest for us to then look for what? Price action confirmations to go longs. So we have, if we have a break of this level, we'll be waiting what? To go in from longs from this other level. And now this is where I like to what? Look out for what? More confluences. When once I go down to the lower time frames for what? For trade entry confirmations. Introducing what? A Fibonacci retracement tool. You clearly see what? The second point of interest that we clearly identified already aligns perfectly well with what? The Fibonacci 50 reversal zone. And now you see what? I would actually give buying opportunities from this level much more preference than I would from the first level right here. So I'd very much expect price to dip a little downwards into what? The second area of interest as we've identified, as well as what? Retesting what? The exponential moving average. As you can see, we're clearly what? We're broken above the exponential moving average from the hourly time frame perspective. And this is where what? We would then expect what? For price to come and then what? Retest the exponential moving average. Retest what? This key level somewhere around what? 88,500 psychological round number. Retest also what? The Fibonacci 50.0 strong reversal zone for what? The potential buying opportunities all the way backwards to the upsides. And then what? With our anticipated take profit targets the negative 27.2 or the negative 61.8 of the Fibonacci retracement. So somewhere around was 89,700 psychological round number. Now this is where what you want to what be patient enough to wait for what price to come into what the point of interest, and then wait also for what the right time zone. So you want to be getting in what at the right time zone, be the London time open, London session, whatever sessions you are very comfortable with trading, and then what look out for what candlestick confirmations, the rejection candlestick, and then what the momentum candlestick as entry confirmations to go long for what these identified what areas of interest. Now that's it, guys. So if you find all these tips useful, make sure you subscribe to the channel. I give away free stuffs like this every often. See you guys in the next video.